The Edgeless Horseman here. It's Friday, the 23rd of September 2022. Interesting day today. Everything is crashing, dollar is ramping, actually off a bit now, but broader markets, the futures were down over 1%. Took every commodity to the woodshed pretty much. Bonds were, yields were up. Now I guess they're a bit negative actually. Things can quickly change, and it's like, no surprise at all. Everybody panics, like always. You obviously you get that sense of doom. I mean, you do feel it, especially looking at Twitter. I mean, everybody's talking about everything going down, regardless of what you actually own, etc. So if you own stocks, the sky is falling because stocks are down. If you own oil, it's falling because oil is down. If you own gold, silver, yada yada. So it's just rampant negativity, like always. And everybody gets that impulse, risk off. Everybody wants to sell. That's the first thing that comes to mind. And it's like, I was just looking again, and I was looking at it late last night. Checked in on the old Bear Creek mining, which is the junior proxy I tend to use, and you can see here how extreme times are already right now. So this is the 2018 bottom. It might not look low relative to now, but this was a huge drawdown. 76%. That would break most people. And it took 2016. Almost 1.5 years, or 2.5 years. So almost 2.5 years of downtrending action. That broke most people. Then it bottomed, went up. Then we had the flash crash, and that marked the bottom. Now we're here in Bear Creek Mining. Note, I don't own Bear Creek Mining. I use it as a sentiment and a proxy for valuations in juniors overall, because it's such a highly levered junior. Got a immense amount of silver, and silver is typically the most speculative of the gold and silver metals. So typically silver juniors go up the most and crash the most. So that's like. And you would want, if you have a kind of proxy, you would want to have a company that doesn't change too much. It just follows the mood swings of the market. Sure, I mean, Bear Creek Mining has diluted, and I think they added another project, but that's still pretty much a beta project, I would say, because it seemed to be so high risk. So when it's risk off, it's really risk off. When it's risk on, it can go up a lot, and you can see this here obviously. I mean, this is the global financial crash bottom. It went up, like I say all the time. I mean, to focus on the now is totally meaningless. Everybody's focusing on the now. Everybody who sold here was focusing on the present mood, how they felt in the moment. Nobody was thinking, hey, what are these stocks going to trade at in 1-2 years? Because no downtrend lasts forever. They were not thinking about that. They were thinking about the pain they were feeling, the losses they had, that it can always get worse, which is true. But they forget that no trend lasts forever. And all of a sudden it bottomed, and then it went up 2,000% in what was that? Like 2-3 years. So 2,000%. That's 21 times what it was trading at down here. So you can it becomes kind of obvious. I mean, if you were down 90%, you would have made that back and more, just from sticking out. And every purchase you did down here had that's the thing. You don't even need market timing. I mean, look at the expected returns. You could be buying here 500% in 3 years, 600, 700, 800. All of these buys all the way down ended up being extremely profitable. You don't need precision. You don't need to catch the bottom. That is what everyone is focusing on. I mean, I posted this chart today. I mean, it's pretty. If you had, like I've said before, if you had no idea what this sector was, you had never invested in it, somebody just showed you a chart of this, showed you this chart and said, here are the valuations for this particular sector X, and somebody said, when would you be buying? Well, I mean, this Bear Creek Mining recently, it actually ticked a bit under the worst bear market bottom. So it was at the lowest level going back to 2004. And you can see here that these extremes, this is global financial crisis, worst bear market bottom, and now we're here. This happens, let's say once every decade. You get one shot at this, and it lasts for, I mean, the actual bottom just lasts for a day. But this happens, you get this kind of a layup once every decade. So you could wait 10 years to see this kind of a layup with, extreme expected future returns. And you would be happy to wait one decade. If you caught one of these bottoms and you made, not saying that you had to be 100% deployed from the start here, but you will make, if you're down 50% and it goes up 664%, you obviously make a lot of money, enough to even wait 10 years and do nothing, and you would still beat the market. But when I post this, and it's like, this should not make sense to 95% of people. I don't think 95% of people do not agree with me. I think I'm the only one just constantly ramping about this is the best time to buy, this is the best time to buy juniors out there. 95% of people do not agree, do not see it that way. It's like somebody today, he's a funny guy. He's really a hot money guy or a momentum chaser, even though he doesn't believe that, I think. He doesn't see it that way. But he's like, yeah, but he's like, well, you have to be careful about dilution. Of course, dilution plays a part, but how much dilution would you need? I mean, to buy here and not make a profit, or buy here and not make it. Do you know how much dilution every junior would need to, do in order for it not to be profitable? From this bottom just to this top, if you bought a junior here, it had to dilute more than 66% in order for you not to have made money here. Do you think there's a bunch of juniors out there that's gonna, right at this point, especially if they have cash? I mean, it's a fair point from the perspective of you obviously prefer and want companies that don't need to finance in the next 6 to 12 months. That would be ideal, because there are some that are need to raise down here. But at the same time, if you can get into a private placement with warrants right now, Jesus, I mean, oh my God. It's like right now, I'm gonna jump into every decent to good private placement I can find with warrants. I'm gonna get in. Those can return probably 2,000% or something. Point is that nobody should agree with you that you're buying here. And note, there's still tax loss selling left, so things can get cheaper. I'm pretty much fully invested already. And I went over that in the last video about, okay, what do you do if you're fully invested? Do you just throw up your hands? I won't. I'm not doing that, because I realize it's like, take this case for example. If Bear Creek falls, and we're assuming that it will at least reach this level, which it's always reached after a bottom ever since 2006 or something. Okay, let's assume this, Bear Creek does not go out of business. It's still around, so it will at least reach this level, which it typically reaches. Okay, if Bear Creek falls 10% from here, it might not sound much, it might not look too, like a big deal, and if it's already down as much, doesn't look too much. But look at the future expected returns. A 10% drop from this spot here, 10% down, and the future expected returns go up 100%. So instead, if from here it has 744% expected return, drops 10% more, that's more than 100 or almost 100% additional return. So that's what I keep saying about, look at, you should have a nice watch list of companies. I'm not even gonna say which companies, that's up to you, because again, it's like, I don't want to make this sound like I'm pumping for my own gain here, just to, you know, hopefully drive home the point even better. Have a watch list of, you know, preferably cashed up juniors. You know, in right now, like I've said recently, it's like I'm favoring, you know, advanced explorers, developers more and more because of the sunk costs, etc. Because it's you can buy all the success and all the money that it took to get to that success for like 70% off today. So it's you're stealing them blind. You're stealing from every previous financier, basically. Somebody spent, let's say, 200 million to get a company to that stage. You can buy it for 40 million. So you're stealing all that work and success without having to wait a day to get it. So it's absolutely disgustingly good for a buyer right now, for obvious reasons. But again, if you have a, you know, you have a watch list, you're fully invested in like 20 stocks, let's say, and it might not look like much, but let's say one goes down 20% and one goes down 30%. That if you switch some from that minus 20 to this minus 30, because let's say that actually was more undervalued, nothing had changed for either company, you might be packing on 100% extra return on that money. So even though you're taking losses when you sell, you're permanenting a loss, you're buying something with an even higher future return. You boost your future expected returns. So you will make more money in the future, even though you had the exact same loss up until today. If you have $6,000, or you started with $10,000, you are minus 70%, so you have $3,000 left. And the portfolio you have when it's down 70% maybe has an expected return from here of 300%. So you're going to make money on that. But if you can switch to some companies that maybe you do not own, or some you actually own but are more down more than others, so you shuffle around your portfolio. You take what the market gives you. Somebody's panic selling stock X, somebody's panic selling stock Y more than X, yada yada. So you deploy into that. You permanent a loss, a stock you're down, let's say 70% in, and you buy a stock that's down 90%, let's say. Maybe it's a 200% additional expected return. That is going to have immense consequences on your long-term portfolio. Because even though, again, in the moment there is no change in your portfolio, you only have 3,000 to invest, and you invested in other stocks. Nothing has changed at that point in time. It's just that your future portfolio will look a lot different. Because the stocks you hopefully bought are going to go up way higher than the ones you sold. So it's like, this is, you know, there's a good saying I like. It's like, your biggest returns are made in the bear market. I love that quote. Your biggest returns are made in bear markets. It's just that you can't see it at the time because they have not, you know, come to pass yet. But this is prime time. This is no time to, again, it's like you can come up with any different reasons. Like I did this tweet. Forget about TA, forget about what price of paper, silver, gold is doing. Forget about metal support levels breaking because gold got flushed early in the day down to, well, now it's actually below the support again. I think that's like 1660, some people say. I don't care. I'm looking at this. what kind of metal price is this pricing in? What future am I paying for? I would suggest I'm paying for a future where gold is at 1400 in juniors. Gold is still at 1656, 57. It might be 2000 in 6 months. I have no idea. But this, to me, is all noise right now. And forget try to time. And everybody will come up with any excuse they can in order not to buy right here. Because obviously if you're not in this sector and you're afraid and you see people taking risk, you get afraid that, hey, I mean, if we're close to a bottom, they might actually make out like a bandit and I won't because I'm too scared to jump in. So they're going to try to convince everyone else, obviously. I mean, one could say that that's what I'm doing, but at least what I say I think makes total sense. This is like the biggest layup in last 10 years almost. And that does not mean, and I repeat this, I've said this a bunch of times, this does not mean that it can't go lower. This was a layup. It still went... Okay, even this was a layup. It still went down 42% before going up 320%. So what I call a layup is not the same as this is literally the bottom tick. I have no idea. Again, if this falls 20%, 10% more, future returns are simply gonna go up, but it's gonna feel a bit worse in the meantime. If we go into tax loss selling and maybe some of these stocks sell off like 20% or whatever, future expected returns get jacked up from, what was that, 841 to 950. So you get an additional, 100+% return. Nice. Maybe again, some stocks you have on your watch list goes down 30%. And you get an expected return of 1,100%. And let's say you sold something that you were down a lot in, that had an expected return of 837%, but you sold that, so permanented that loss. Yes, it sucks in the moment, but you bought something that's going to make up for it and even more. So I mean, in this example, if we assume this, again, it's Bear Creek or Junior's going to reach this level, okay, expected return of 744% when we reach the next sentiment high, which might, be 2-3 years away. I have no idea. Still, you would need to, in order to break even with such a return, you would break even if you were down 89% in your entire portfolio right now. And that assumes you can't switch around and have this expected return go even higher. I don't think a lot of people are down 89% right now, unless they bought here. I mean, literally, if you have 15% of your portfolio in some stocks that have traded sideways or down 20%, you're not going to be down 89%. So it's like, in my opinion, I cannot lose. Even if I was down 80% right now, within 3 years, I will have made that back. And what typically happens, the worse the crash is, typically greater the rally. This was, a 76% crash, that went up 228. This was a bigger crash, went up higher. This was an even bigger crash, went up higher. This was the biggest crash of them all going into the global financial crisis. What happened afterwards? Yep, 2000. You can see it basically, okay, topped, crashed, retraced the whole movement. Let's say if we call this a top. Top tier, crashed, retraced the whole movement. Top tier, almost retraced the whole movement. Top tier, retraced the whole movement. Crashed here, top tier, crashed. I think this is going to retrace the whole movement. I think juniors are going to go up and take out their 2020 highs, in the next 2 years, 2-3 years. Easily. Anyway, I thought this was going to be a short video today. It's like, it's like you do whatever you are comfortable with. But in my opinion, you cannot ignore the fact that what we know is that no trend lasts forever. No trend lasts forever. No downtrend lasts forever. This will turn. This will turn. We have 5,000 years of history saying this will turn. This is going to turn like everything else. Everything changes. This will one day, not this stock in particular perhaps, but juniors will one day be trading up here. That is what I think one should focus on right now, because again, that means that future returns are going exponential, which they do at every crash bottom. That is like the most important thing. Don't focus on the now. Focus on what you're buying now is going to trade in at in 2 years or 3 years. Second of all, even though it does not look like it, you can shuffle your portfolio and it becomes better. That's what I talked about in the last video about volatility. Some juniors are going to get hit with tax loss selling more than others. You're going to see stocks, I think, or maybe, I mean, unless it turns before that. I mean, who knows? This market might turn around tomorrow and we actually go up and then we have, tax loss selling. But I'm not predicting that. I'm not trying to predict stuff. I take what the Mr. Market gives me. If somebody is dumb enough or needs to put in a market sell order in a cashed up junior that's already, trading so cheap that it has a 300% expected return, if somebody puts in a market sell order, brings it down to minus 20%, whatever, and the future expected returns go from 300 to 500%. Anytime I can sell something with less expected returns, I am creating future profits. So this is not a time to be a scared shit. I mean, in hindsight, I just look at this chart. Just look at this chart. If somebody asked you, when would you want to buy? When would it be costliest to sell? It would be pretty bloody obvious. In hindsight, they're gonna, I wish I bought here. In hindsight, when this has gone up hundreds of percent, there's going to be people, I wish I bought here. But when it happens like now, everybody finds an excuse. Rates are going up. Dollar is going up. Gold is going down. Gold just broke support. Silver is down 3%. The Fed is going to keep raising rates. Inflation is up. You can pick your poison basically. There's never going to be a shortage of reasons why you should not take risk at bottoms, when the actual risk has gone down exponentially. How much risk am I taking if I'm buying a company that's trading at $80 million, has $40 million in cash, has 3 million ounces on the books, and sunk costs of 200 million? Is that risky? Do you need to be a contrarian to see that, whoa, this is cheap? Holy hell, I'm stealing 75% of value from everyone else that has put in money in this company before me. I don't think that requires a lot of bravery or contrarianism. That is just common sense. But again, it's like nobody will agree with you. Almost nobody will agree with you. Almost nobody agrees with me. Everybody on Mintwit is silent. Nobody's talking about anything they're buying right now. Because everyone is scared to buy. And everybody's waiting for the coast to be clear. For the dust to have settled. When has the dust settled? Let's say the dust settled. I mean, look at how many false rallies this had, for example. It's like, one could say this was kind of false rally, or maybe not. I mean, some would say this might be a false rally. This looked like a, a bottoming event. But if you buy here, you're even worse off than if you just bought more the cheaper it went. So I'm not trying, that's what I say, but I'm not trying to trade this. I'm not, from a TIA perspective, I'm not trying to guess where gold and silver is going. I have no idea what's going to happen during tax loss selling. I just know that I want to be, at whatever level, I'm going to be 100% invested from the bottom tick. And in the meantime, the lower we go, I will have to use volatility in my favor. I will again have to look at many different companies. If one crashes 20% today and one is even, and I like them both equally much, I can sell the one that's unchanged, buy the one that's down 20%. Poof, I'm creating higher return for my portfolio going into the future. So when we actually bottom, hopefully I will be set up in the ones that I have the absolute highest future expected return. So if my portfolio were to be down 70% at that point, hopefully I will mostly be in, let's say, juniors, which I think has an expected return of 700%. That is gonna more than double my portfolio at the next sentiment high. I mean, it's gonna retrace all the losses up until now and then some. So if I started with 10,000 here, goes down to, let's say, 3,000. If I set myself up in let's say expected values of 700%, depending on what kind of opportunities we actually get. Let's say again, many companies from here go down 20-30%. So in that case, and I have 30% less, so I left. So I have $3,000 left of my initial 10,000, and I put myself using volatility, just value shuffling basically, and I end up when we actually bottom. If that's down here, I don't know. Let's say it bottoms in January, and let's say I have a 700% expected return. That is 3,000 times 8. That's 24,000. So I would, even if I bought here, suffered a 70% decline in my portfolio, had 3,000 left. If I set up myself, was active, cool, calm and collected, looked at all the opportunities thrown at me by Mr. Market all the time. Okay, stock X down 20%, trading at 80% discount. Stock Y down just 60%, trading at 60% discount, whatever. So if I'm active, cool, calm and collected, makes the most of these extreme, because again, like I said, this is at these levels is where the future returns go exponential. So a 10% drop from here might not look as too much in a junior. That might lead to 100% additional return until the when the sector changes and we go into a let's say a sentiment high. So in that case, let's say I started off with 10,000 here, was down 70%. I expected at the next sentiment high, I'm at least going to be up 140%. Even if I went all in and no additional dry powder, I think I would make money in this sector at the next sentiment high. That's why I talk about, I don't think I can lose in this sector. Because once you master volatility and your emotions, the amount of future returns you create at these extremes is just breathtaking. And so far, I have been all in invested since 2015. So this has served me very well. I ride all the way to the bottom every downtrend with my full position, but I use dry powder. So not only is my total portfolio worth a lot more, and I have actually am up in my total portfolio, but I also have used dry powder. So I literally think that I could have gotten fully invested here, and I think I'll still end up making money at the next sentiment high, simply because when the mistakes are the costliest around these levels, and people 95% make mistakes, I'm not gonna make said mistakes, and I'm gonna be active. I'm gonna be aware of the fact that a 20% drop in a stock might not look like a lot because everything is already down so much, but that can have huge ramifications for the future returns in that stock. I hope I'm trying to be kind of a moral support or whatever, but think about these concepts. If they don't make sense to you, don't do it. If you can't stomach being down a lot, you shouldn't be in this sector for starters. And for sure, not every company will be a success, etc., etc. And don't buy any company I like. Buy whatever company you want, but like keep these concepts in mind, I think, because almost nobody is able to do that. You can look at Twitter. I mean, almost nobody really knows how to beat a volatile market. Almost nobody. And again, I would expect that almost nobody agrees with me. But it makes absolute sense. And so far, it has worked out very well. So why fix something that is not broken? Thanks for listening. Have a great weekend. And, well, quote, this is not investing advice. Do what feels best for you. And, good luck out there. And don't invest money you cannot afford to lose, especially if you need it in a short time frame. Because if we go down if units go down for the next 2 months and become even cheaper, and you put in money now that you're gonna need within the next 2 months, I mean, there's no guarantee that this sector will have bottom in 2 months. So in that case, you might end up selling, etc., and you're probably gonna make more stupid decisions, let's say. So don't, if you're uncomfortable, you're gonna make mistakes. So it's like I don't think almost nobody on earth can take the amount of price pain that I can. I am pretty much involved with my whole net worth all the way from the top here. And I'm still comfortable because to me it's only money. I enjoy it. I see this as a game. I just want to beat the market as much as I can. And I don't have, high upkeep, etc. I'm not a materialistic guy, really. I don't have a lot of expenses. I just enjoy beating the market. That is my main goal. That is the most stimulating activity I can think of. Just beating everyone else. Everyone else being Mr. Market. That is my hobby and, kind of profession. But if you're not comfortable, don't, just because I do something, don't go like, all in or anything like that, because then you're going to end up making mistakes. You have to be able to sleep at night. If you know what you're doing, I know this is going to turn. That is why I'm quite comfortable. And, 90% of the time on Twitter, I'm spent, posting memes. I know this is going to change. I know why I'm buying. I'm buying because what's going to happen within the next 2 years. I'm not buying because what's going to happen tomorrow. We're probably going to go down tomorrow. I have no idea. I just know that everything changes. And when it has changed, I'm going to make a lot of money. Thanks for listening. Bye.